Good morning, students. My name is Regina Orico, and I'm your financial accounting teacher. I'll be taking on today being the 27th April 2020. I'll be taking on SS3 final revision on what? Past question. I repeat, SS3 revision on past questions. Now, these are the what? The line of what questions we have for today. These are the questions we have what for today. Now, the first question says, describe the following: bank statement and bank reconciliation statement. I repeat, number one question says, describe the following: 1A, bank statement, 1B, bank reconciliation statement. Number 2, explain 5 causes of disagreement between the cash flow and the bank statement balances. Question number 3, state 2 ratios which falls under the following classification of accounting ratios. Which fall under the following classification of the following accounting ratios. And I, we have the profitability. I, we have the liquidity. I, which is what? Investment what? Ratio. Now for the solution. First, we have what? The question. We have question number 1. We have what? Solution here. After indicating your solution, please always what? Don't ever forget to number your what? Your word. Now we have question number 1, which is what? Number 1 indicated here. Then question number 1A. We have number 1 what? A. Question number 1A says what? Describe bank statement. Now how do you describe the bank statement? A bank statement is a statement prepared by the bank to what? To show each transaction between what? The bank and its customer. I repeat, the bank statement is a statement prepared by the bank to show its transaction and that of the customer. How do they show the transaction with what? With the bank and what? Of that of its customer. First, the bank will send what? A statement, monthly or at an agreed interval, to a certain account holder. What? Showing the what? The amount of money deposited, showing the withdrawal of money, and showing the what? The balance left in his what? In his or her account. That is what? The bank statement. Now, let me write what the definition of what bank statement on the board for you. We have the bank what? Statement. Bank statement is what? Is a statement. Is a statement prepared. Is a statement prepared by the bank. Prepared by the bank to show its transaction and that of the customer. Now the customer here is what? The account holder. The customer here is the account holder. And I told you that what? The bank statement is what? Is sent to what? A customer. On the monthly basis, it is what? It is sent to a customer. It is sent to a customer on a monthly basis or at agreed interval. At an agreed interval. At an agreed interval. Now, we've answered the question what? We have done question number what? 1A. Question number 2 is what? 1B says what? Bank reconciliation statement. Now, we should describe what? Bank reconciliation statement. 1B. Bank reconciliation statement. The bank reconciliation statement. Bank reconciliation statement is a statement or is a document that shows the disagreement between the cash book and the bank balance. Between what I said, it is a document that shows the disagreement between the cash book and the what? The bank statement. Bank reconciliation statement, I repeat again, is what? A document that shows the disagreement between the what? The cash book and the what? Bank statement. Now, what makes the what? Bank reconciliation statement different from the what? From the bank statement? In the sense that the bank reconciliation statement is just what? A document that will state all the problems and try to reconcile the problem that is involved between the cash book and the bank what? Statement. Now, let me write the definition of what? Bank reconciliation statement on the board for you. We said it's what? It is what? A document. Bank statement, reconciliation statement is a document prepared. It's a document prepared to reconcile the disagreement between the cash book, and the bank statement. Now, question number 2 now. We are done with what? Question number 1. Question number 2 says, explain 5 causes of disagreement between what? The cash book and the bank statement. Explain 5 causes. The 5 causes of disagreement between the cash book and the bank statement. Now, I have to highlight the what? Highlight the points given what? On the 5 causes that show the disagreement. First, what are the causes of disagreement? Or what you need to do? Indicate the what? The number of the question you are answering, which is question number 2. Question number 2. Now we have what? 5 causes. 5 causes of disagreement. 5 causes of disagreement between the cash book and bank statement. Bank statements are we have what? Unpresented check. Unpresented check. Now, unpresented check is a check issued to a customer without presenting the check to the bank. I repeat, unpresented check is a check issued to a customer without what? Presenting the check to the bank for collection of what? Of cash. That is what? Unpresented what? Check. Question number 2. Is uncredited check. Uncredited check. Uncredited check is one of the causes of discrepancy between the cash book and the bank statement. Uncredited check, it is what? A check presented to the bank or deposited to the bank into the bank, but the bank did not what? Credit what? The check, or did not recognize what? The check. Now, we have uncredited check, we have unpresented check. The third point is what? We have bank charges. Bank charges. The bank charges is an amount of money deducted from the account of what? Of account holder. I repeat, bank charges is what? An amount deducted from what? From the account holder for services what? Render. Now remember, as the bank had what? Delivering their services to what? To individuals in the society, they have to what? Make their own charges. And these charges is being removed from the account what? Account holders what? The amount given. It is what? The amount deducted from the what? from the account holders income for services rendered by the bank. That is bank charges. Number 4 here we have IV. We have standing order. Standing order. Standing order is an instruction given by the bank by an account holder to pay certain amount of money into a named person's account. I repeat, it is standing order is an instruction given by the bank by a customer to pay certain amount of money into the account of a certain individual. Into the account of a certain individual. Now, 5, we have dishonored check. 5, we have dishonored check. A dishonored check is a check rejected by the bank for certain reasons. A dishonored check is a check rejected by the bank for some certain reasons. And what are these reasons? One, we have wrong name given on the on the check, wrong spelling of figures, wrong use of dates, and wrong signature of an individual. Those are the reasons of a check being dishonored by the bank. Now, question number 3. Question number 3 states that state 2 ratio which fall under the following classification of accounting ratios. State the following state the following ratio which fall under the following classification of accounting ratio. Now, question number 3. Now, what are the ratios that falls under the of the following classification of accounting ratio? First, we have the profitability ratio, which is one of them that we have to look for ratios that fall under profitability ratio. Now, ratios that fall under we have question number 3. Accounting ratios that falls under I, profitability. Under profitability, we have here? We have gross profit percentage. Gross profit percentage. Gross profit percentage. We have gross profit percentage. Here we have net profit percentage. Net profit percentage. Then we have II, which is liquidity ratio. Liquidity ratio. Under liquidity ratio, we have current ratio. We have current ratio or working capital ratio. Working capital ratio. We have working capital ratio. We also have what is called rate of stock turnover. Rate of stock turnover. Rate of stock turnover. Rate of stock turnover. Then III. We have what is called, here we say we should look for ratio under investment. ratio under investment. Now the ratio under investment, we have price earning ratio. I repeat, price earning ratio. Price earning ratio. Here, after the price earning ratio, we have dividend yield. Dividend yield. Remember, dividend is what? A profit which a shareholder gains from an investment. Dividend yield. Dividend yield is what? A profit which a shareholder or an investor gains from what? Investment. Now these are the ratios that falls under the profitability ratio, liquidity ratio, and investment ratio. Now I will give assignment. I think we've come to the end of this lesson for today, and you have to solve some problems as you are staying at home. Solve some problems instead of Instead of just sitting and doing nothing at home, getting bored of of this thing home, or watching Fluent manufacturing account assignment. Question number 1. What is manufacturing account? Question number 2. Question number 2. Question number 2. Explain list and explain other ratios that fall under I. We have activity ratio, II, we have leverage ratio, now we've come to the end of today's lesson. Have a nice day and enjoy your staying at home, and please don't forget to carry on this assignment at home.